Bringing you back up to date on some breaking news that's just happening. Apparently, the House Speaker John Boehner not releasing a plan tonight. There was a conference call. It happened about 4:30 this afternoon with House GOP leaders. No plan coming out of that call. However, the plan is to have a bill out tomorrow afternoon. So also happening around 6 p.m. we're told, President Obama will be meeting with Harry Reid and Nancy Pelosi. That is where the situation stands right now in terms of coming up with a way to avoid defaulting come August 2nd. Now, the worst case scenario now, what happens if the White House and Congress fail to come to terms on a debt ceiling plan before that date? It is a troubling question on the minds of a whole lot of Americans, from investors to those who run U.S. corporations. Wall Street, though, not panicking yet, but it has come up with a doomsday plan should the clock run out on Washington. And here to tell us about that fallback plan and what it could mean for your retirement fund or investment portfolio is RichDeSalvo. Thank you so much for joining us again.
My pleasure, Heather.
He, of course, is the former managing director for Morgan Stanley. So what does this mean for us? It means different things depending on whether you're talking about retirement money or money in savings accounts, correct?
That is correct. So specifically, let's take a look at retirement savings. What I don't want people to do is go to sleep tonight and not being able to sleep and have these terrible things marinate for 8 hours while they're trying to go to sleep and wake up and feel and panic. There's no reason to panic. I will tell you, most importantly, if you look at your retirement savings in 401k, which is long-term savings, and when you move money out from Fund A into Fund B, you're not paying tax on it, Heather. So therefore, let's be prudent. Let's be responsible. Let's not be reactionary to something that may or may not happen tomorrow.
And you said, and I looked through your notes, and I wondered what exactly this means. Wear the right clothes for the right occasion.
Okay,
I like that. I like that a lot.
Okay. What I mean is inflation is coming to this country. It doesn't mean catastrophe. It just means that inflation is coming. So therefore, if inflation is coming, your portfolio should be properly dressed. So let me give you some specific examples. Do not rush to cash. When you have inflation, where do you put your money? Your money belongs in dividend-paying stocks. Specifically, energy stocks is a great place to look. Something called master limited partnerships, where the gas comes through pipelines and things of that nature, Heather. That's where you want to put your money. Inside a dividend-paying stock, they're paying anywhere from 1% to 5% per year. And we talked about it earlier. Treasuries at 10 years, 3%. So imagine a company paying you for the right to own their stock. And
how do you inflation-proof your portfolio?
Well, one is stay in the market. Two, specifically, is dividends. Okay. Three, I'm going to cheat at my notes here a second. Okay. The third is you want to stay short on the yield curve. And what that means is don't go out and buy a 30-year corporate bond, because if interest rates go up, the value of the bond will drop and you're stuck with a lower interest rate. So you want to stay short. So if you look inside your 401k specifically, look for things like dividend growth. Look for things like short-term bond funds. Make sure it says short in front of it, no longer than a year or 2 years out.
So finally, should we go out Monday, sell everything? Monday morning?
No, I do not want you to. However, I do want you to look closely. And what I do want you to do is take your money out of small cap stocks. Very important, because that will probably get hit the hardest. And I do want you to modify your account, right, and wear the proper weather, wear the proper clothes. And I think, and after that, again, it's for the long term, so invest for the long term.
And we have
prudent.
A couple more seconds here. What is the most powerful tool of a 401k?
It's actually something called dollar cost averaging. And what that means is every Friday when your paycheck comes, you're actually taking a piece of those dollars and actually investing in the stock market. So you're not caught up in the herd mentality. Should I buy? Should I sell? What should I do? And think about money being put in. Every Friday, it's your forced savings going into your account. It's a wonderful way for the account to grow, not have you to worry about should I or should I not do something.
All right. So don't worry, right?
Do not worry. Do not panic.
End it on a positive note. Thank you so much, RichDeSalvo, joining us. Thank you.